Welcome to the monthly market report for March of 2022. My name is Corey Harter with Homes by Chris Harter and eXp Realty. And I'm thrilled to be here today to talk about three of the most important topics in the housing market. We're going to go over home prices and answer the question, are home prices accelerating? I think we know that answer. We're going to talk about supply and demand, how that is impacting home price appreciation today. Then we're going to wrap on net worth as we talk about some of the long-term financial benefits of owning a home. Now, I mentioned a moment ago that this is March of 2022, and truly it's hard to believe that it was over 2 years ago, almost to the day, that a worldwide pandemic really came upon us, swept through the nation, and fundamentally changed a lot of what we do. And housing certainly wasn't immune to that. A lot of things changed in the housing market, and I think one of the biggest things is the change in home price appreciation. So that's where I want to start today and really reflect on what's happened over the past couple of years. In 2020, CoreLogic said that we had 6% home appreciation throughout the year. And that's pretty significant. If you think about prior to the pandemic, a more normal year of home appreciation was about 3.8%. So 6% is really significant. And you know, we all saw that continue and unfold in 2021 as we saw home price appreciation that was more than double that. So really significant home price appreciation over the past 2 years. And that is largely due to supply and demand. More buyers in the market than we've had homes available, right? So I want to walk you through this and what it means going forward as we look at home prices forecast as well. I think one of the best places to start is with a deep dive into home appreciation last year. So the answer to the question, are home prices still accelerating, is yes. And we can look at this graph and see percent year over year price increases by the month, going all the way back to January of 2021. So if we look over on the left-hand side, in January of 21, we saw 10% home price appreciation. So year over year, from January 2020 to January 2021, home prices increased by 10%. And then as you can see, month over month, it really started to accelerate through the year. Now, when we hit the summer, you see July, August, and so forth, it started to level out about 18%. Very significant home price appreciation. But that's when we started having the conversation and we started hearing experts saying our home price is going to decelerate, meaning continue to increase, but just at a slower pace. And the reality of it is, we saw that kind of 18%, it held steady for a while. And then into December and January of 2022, we can see the latest data we have, that green bar is showing that home prices are starting to tick back up. And that's, again, a direct result of high buyer demand and low supply. So buyers are really competing for homes, and that's causing home prices to tick up. Now, if we look at this on a state-by-state basis, this is really an interesting map. It shows changes in prices in the last year from the FHFA, and this is really interesting because what we see is that the FHFA shows that the national average is 17.5% home price appreciation last year. Now, obviously, some states were higher, some states were lower. You can see that across the board. But the reality of it is we didn't have depreciation in any state. No depreciation. Home prices were rising throughout the country. Again, a direct result of supply and demand. So where we can break this down even further, if we look at the last 5 years, national average over the last 5 years was 54.5% home appreciation. So its inventory is low and buyer demand is high. This is what we are starting to see year after year, is increasing home price appreciation. And that really exploded in 2021. But if you look back over the last 5 years, home appreciation has been incredibly significant. Now, where this gets even more interesting is if we look at the past 30 years. So changes in price since 1991. If you go all the way back 30 years, the national average is 258% home appreciation. That's huge. I mean, that's really, really massive. 258% over the last 30 years. There are people on the fence wondering, is now a good time to buy? Should I buy a home? Am I buying at the top of the market? Is my home investment going to be valuable? Is it going to increase? And if we go back 30 years and we can look over time, I would ask this question. If you could go back and buy a house in 1999, would you do it? I think looking at this data, the answer is clear. Home prices have definitely appreciated in value and been historically a very strong investment. And you know, the question becomes as people are trying to decide, but what's the next move going forward? What's going to happen throughout the rest of the year? We have to look at home price forecasts for 2022. This slide here, it averages out what the experts are saying. We follow 7 key entities who forecast out home prices throughout the rest of the year. And when you average those together in the green bar, you can see they're projecting roughly 6.1% appreciation through the rest of the year. So CoreLogic, they're on the high end, 9.6%. Zelman's on the low end right now with 3%. But the reality of it is, all of the experts are saying home values are projected to continue to increase throughout the year. That again, a direct result of supply and demand. And the reality of it is, we are likely going to see these forecasted in an upward direction going forward as we continue to have low inventory on the market. You know, there's a nod towards more sellers coming into this market in the spring and more new construction. And that could all ease some of this home appreciation as more inventory is available. But what we're seeing is experts are all projecting home prices to rise. So I want to stop here for a moment and talk about supply and demand, because you've heard me mention this several times, that the supply and demand balance is really what determines where home prices go. And I think this next graph is a really good foundational element to start that conversation. And this is how the market impacts, our inventory impacts home prices. So right now, we're squarely in what you would call a seller's market. We've all heard this, we've all felt this, and that's what you can see over here in the blue bar. Essentially, it means more buyers in the market than homes available for sale. They're competing for homes. That's driving prices up. And that's the general law of supply and demand. Anytime there are more buyers for an item than there are people selling that item, prices will rise. People are willing to pay more for them. Now, a neutral market is where this kind of balances out. And a buyer's market is where there are more homes available than buyers interested in purchasing them. So that causes prices to decline. So we are in a seller's market today. And I think the question people want to know is, what does this mean from a listing perspective? When we look at the number of listings in the market, we've heard that inventory is historically low, but what does that really all look like? So I'm going to show you right now new listings, and they are actually falling dramatically right now. And this is a look at 2021 month by month. New listings coming to the market in thousands. And what you can really see over on the right side here is October, November, December. Listings really started to decline once again. So, not as many listings coming to the market towards the end of the year. Now, this is pretty typical for the housing market because we generally see listings softening in the winter and then picking back up. And you can see that definitely followed that trend over the past year. So that brought us really to this historically low inventory. And what I'd like to show here is that active listings are also dropping again. So what we have again, October, November, and December, active listings falling towards the end of the year. And this means that most homes are selling just as fast as they're coming on the market. So buyers are in high demand. There aren't enough homes on the market. They're not staying on the market. They're not staying active as listings because they're going into pending and sold so quickly. So the reality is, anytime we start to see inventory low like this and prices start to rise, when people hear that prices are rising so significantly, and inventory is certainly driving this in today's market. As prices are so high and they're rising so significantly, they start to wonder about the housing market. And people remember what happened when the housing market crashed. They remember prices skyrocketing. And they worry about the housing bubble also. And the data today shows this really interesting study from realtor.com. And it shows that worries about a housing bubble still persist. Now, this is the percent of people who say they believe there's a housing bubble where they live. And so among consumers surveyed, 77% feel like there's a housing bubble in the market. That's 3 out of every 4 people feel like this is a bubble that's about to burst. Even with the data that's been available that shows month after month after month that we're not headed for a housing bubble. But when we know this is a concern out there, we need to know that there's uncertainty in the market. that people have fears. We want to help ease those fears. So we're gonna walk through some slides in a moment that are going to help you understand. And if you're a real estate agent, 45% of real estate agents feel like there's a housing bubble as well. That's nearly half of the agents out there. So if you're looking for the information to share on why we're not heading for a housing bubble or ease everybody's fears, I think the next few slides are really going to help. So what I want to do here is really paint that picture from an inventory perspective, a supply and demand as we're talking about today. And in this slide shows that inventory of homes today is nothing like the last housing crash in 08, 09. So this is a month's supply of existing homes for the sale in December of each year. Now you can see on the left side, the 4 years of the housing crash, and on the right side, the past 4 years. So let me break this down for you. The orange bars on the left, 2000 through 2010, show that there was a buyer's market and we had an oversupply of homes. So you remember that graph that I just shared with you on the seller neutral buyer's market? These bars show that we were in a buyer's market when the housing market crashed. 9.6 months of inventory in 2007, 9.4 in 08, significantly higher than where we are today. And today you can see is on the right side over in the blue bars, 2018 to 2021. So even in 2018, we had 3.7 months of inventory in the market. It was significantly higher than where we were today. And that was low. 3.7 months of inventory was low going into the pandemic. And then look at 20 and 21. Simply not enough homes to go around. So when there aren't enough homes on the market, that's what drives prices up. But it is a significant different market than what we had in the housing crash. So when people remember the housing crash, we have to remind them that inventory is in a totally different place today. So yes, prices are rising based on supply and demand, but we are nowhere near where we were the last time. I told you I wanted to walk you through buyer demand as well. So let's take a look at this. We had a record high, a 15-year record of existing home sales in 2021. So this is the number of existing home sales from 2019 to 2020 and 21. You can see 2019 was 5.4 million sales. We broke that record in 2020 at 5.6 million. And 2021 just crushed that with 6.1 million homes sold in the country. So what does that say? That says buyers are out there. They're looking for homes. They're purchasing homes. And they're actively in the process. So we have high buyer demand. We have low inventory, significantly different fundamental than where the housing market was when the bubble burst. And the truth is that the people who are purchasing these homes can afford them this time. And I say that because I want to share this data here that shows credit scores are nothing like the last time either. This is a volume of loans in billions with a credit score less than 620. So take a look at those orange bars, 2003 to 2007. Significantly more loans issued to buyers who had a credit score less than 620 than we are now. Where we are now, so 2008 to 21, you can see that those lending standards have gotten much tighter, meaning that buyers are essentially showing their credentials that they'll be able to afford their home, and that's what's lending to the loan opportunities. So very different lending standards are creating a landscape that's nothing like the last time. Credit scores are definitely tighter this time around. And you know, if you're worried about any other fundamentals of the market, let's think about equity for a second. Homeowners have significantly more equity today, and they're in a much better financial position as homeowners in this process. And if you're worried about a foreclosure crisis, I encourage you to go back and look at the data from one of my previous videos, market report that talked about forbearance and the foreclosure update that I gave, because the data simply shows that we're not headed for a foreclosure crisis. We won't see a wave of inventory coming to the market that is going to significantly tip the scales into a buyer's market. There just aren't enough homes going into foreclosure. And we're so grateful for that, because that means more people are going to be staying in their homes. So the fundamentals of this market are really a lot different. And the reality is, we know that people still have concerns. We want to ease those fears. We want to make sure that they understand what the data is saying when it comes to understanding the housing market and having the confidence today. Because as people see prices rising, they start to fear this is just like the last time. And it simply isn't. I think this is really important for people who are still renting right now and thinking, could I buy a home? I'm thinking about it, but I'm watching the prices rise. I'm not sure I should buy right now. I'm concerned that there's a bubble. But the truth be told, we also want to look at net worth, because net worth is really a game changer. And the data that I'm about to show you really paints a very strong picture from homeowners or potential homeowners when they're thinking about long-term financial benefits of owning a home. There's the stability, the security, that emotional American dream of home ownership. That's so important. But as this quote says, with inventory at an all-time low, buyers are still having a difficult time finding a home. So, as you know, as they're feeling like I'm not sure that I want to stay in this game because it's tough, it's a tough road to hoe right now, and prices are rising, and I'm having a hard time finding a home. One thing that we really want to share with those people who cannot be potentially buying right now is the net worth of a homeowner versus a renter. And this is data from last year, from 2021. Latest from NAR, National Association of Realtors. It shows that the average net worth of a homeowner today is $300,000 versus the average net worth of a renter is just $8,000. Think about that for a second. $300,000 versus $8,000. If we're talking about building that financial future and really thinking towards that long-term goal of home ownership, and we look at the data, the history shows how much homes have appreciated over the last 5 to 30 years. That's really a differentiator maker of net worth. That's really something people need to know, especially for those that are renting and they're thinking, I could buy right now, but I'm going to wait. I'm going to see if prices fall. I'm going to see if mortgage rates drop. We know we're not in an environment that's projected to happen. So buying now and getting that net worth journey started toward home ownership is such a game changer for the future. And I think another way to look at it is this. This is a really powerful one as well. It says the net worth of a typical homeowner is about 40 times the net worth of a renter. That's just really a huge number. So the numbers don't lie, and they can really help drive some powerful thoughts for potential home buyers who are really trying to decide, is this the time for me to buy? Now, we know everyone purchases a home at a different time for a different reason. They're financially, emotionally ready at different moments, and that's okay. But being able to share this data with you guys so you can make the most powerful and confident decision is really, really what's important. So I want to end this section with a quote from the National Association of Realtors. It says, while the booming housing market contributed significantly to the recovery of the U.S. economy, research has consistently shown that home ownership is also associated with multiple economic and social benefits to individual homeowners. Home ownership has always been an important way to build wealth, and I think this data shows this loud and clear, that 40 times greater the net worth than a renter. That is a game changing. So we want to look at the big picture, and we say home prices are rising, they are still accelerating, they're projected to continue rising, and that is a different reflection of supply and demand. We also know that people have concerns about a housing bubble. But when we look at the data, look at fundamentals of this market, we're simply not there. And when we think about it, the concerns that potential buyers may have as they look at all this data, they look at those rising prices, they feel those rising mortgage rates, they feel all the feels, getting back to the stability, the security, the American dream of home ownership. And by the way, don't forget the net worth component that really drives your financial future. 40 times greater for a homeowner versus renter. I hope you've enjoyed the information I've shared with you. I hope you find this information helpful. I look forward to seeing you guys soon in the April market update 2022. I am Corey Harter with Homes by Chris Harter in eXp Realty. If you have any questions, please feel free to reach out to us. We'd be more than happy to help you. Have a great day.